Bloomberg Intelligence. Private Markets in Focus.
This Private Markets in Focus segment is brought to you by Franklin Templeton. Looking to give your portfolio an edge? Then look to Franklin Templeton's private markets platform. You can learn more at ftprivatemarkets.com. In this week's Private Markets in Focus, we want to welcome John Stewart, founder and managing partner at MiddleGround on the PE market. And John, whenever I think of the PE market, I think first and foremost about how there haven't been as many IPOs from sponsor companies, from private equity, and how that part of the market has kind of struggled. We're not seeing a lot of M&A from PE companies as well. What changes that? Is that a macro market, something that's holding back PE and the industry right now? Is that purely based on where rates are and the economy?
Well, yeah, I think it goes back. I think you have to go back and look, back, prior to COVID to what was going on in private markets, and the private market, redemption rate, DPI over NAV was averaging 29 to 30%. And since 2021, we've been in the, 11, 12, 13% range. And so the markets have had the private markets have had a lot of headwinds with, interest rates going up and different factors. And this has definitely impacted the exit environments for all of private equity, not just for IPOs, but especially IPOs, because of the difficulty with raising the capital in these markets.
I know, John, your firm is focused on the middle market for industrial and specialty distribution businesses. The Make America Great, reshoring, friendshoring, what's that mean for your business? I would think there'd be a lot of demand for the type of industrial deals you like to look at.
Yeah, look, I'm not a political person at all, but there definitely has been an impact. And look, I think making an industrial manufacturing great, goes back to prior to COVID. And we start to see the benefits of a lot of those programs. Most of our companies, we own over 220 factories all over the world, 147 of them in the United States. And I would say by and large, demand is up at every one of them. Of course, we're faced with headwinds like labor shortages. And, that's where companies are investing in automation and technology, which we're seeing. And that's supported by, the recent big, beautiful bill, which restored, interest expense deductibility, which, directly helps cash flow of private equity owned companies, as well as bonus depreciation, which is encouraging, investment in these North American businesses.
John, your background is that you started on the factory floor at Toyota, and you worked your way up to manufacturing leadership before you moved to private equity in 2007. So you have a special interest in our manufacturing economy. Where do you see that right now? We got ISM manufacturing numbers yesterday that showed that manufacturing is back to growing again, expansion, which is great news. But on the other hand, it's not a big driver in terms of employment, even GDP in this country.
Look, I think we've had a lot of headwinds. We just in March of this year, broke over, the 50% point in the PMI, which is that expansion that you're talking about. Prior to that, we saw the largest contraction that we had ever seen, peak to trough, since the Korean War. So, literally, we had not seen a market in the industrial space in our lifetimes. And I'm dating myself there, but, I wasn't alive during the Korean War. And so, this is, uncharted territory, that we're in right now. And, I think there's a lot of opportunity, though, in industrials where we see that, like I said, demand is up. There's investment now. A lot of these, there's over 85,000, businesses that are less than $250 million of revenue that make up a large part of our industrial economy. Public markets, industrial companies don't really get rewarded for being industrial companies, in the public markets today. And so I think you see, a lot of the companies go into the private sector, especially on the industrial side. And we've actually done, a number of the opposite of going IPO. We've done a number of public to privates Our most recent one in the U.S. was taking LS Starrett, test and measurement business, off the New York Stock Exchange, taking it private in 2024.
John, how has the rise of private credit impacted your private equity business?
Well, look, a couple of weeks ago, maybe 3 or 4 weeks ago, I was having a lunch with some other private equity owners and Scott Bessett, and he was talking about how they're going to be putting their foot on the gas for the economy for the the rest of the administration's term, and that. Hopefully we'll see some of the interest rates, reduce at the base rate. But the competitive factor about 18 months ago, a lot of the non-traditional lenders like BDCs and other types of groups that, are financing these types of deals, it started to get very competitive. And so they started dropping their spreads. And so overall, we didn't see a huge decline in the base rate, but we did see, due to competition, people cutting their spreads. And so, for a while there, it was hard to get 3.5 times leverage, to do a transaction when people were, using 5 and 6 times,
right.
And paying 5 or 6%, and then it was up to 11 or 12%, and now it's down to 7-8%.
Appreciate it. John Stewart, founding and managing partner of MiddleGround. That's private equity in the middle markets, alive and well. This is Bloomberg Point.